I'm going to show you my strategy of how I pick out stocks, whether I want to either buy or sell at the current price. I'm also going to cover from a fundamental perspective, looking at a company's financial position, whether it's either over or undervalued. I'm going to keep this relatively short, just give you a lot of tips and tricks, just simplified approach of how you should be thinking of all of this. So let's dive right in. First and foremost, if you aren't already, I would download a software like TradingView, Thinkorswim, or Webull, and just start looking at the price of how these different stocks or asset classes are moving and getting a sense of where support or resistance levels are. Also, just like a quick snapshot of how the market is set up. There's a bunch of different companies. They trade on an exchange. There's indices, which really just track a basket of stocks. So for instance, the SPX is the S&P 500. It tracks the 500 largest US-based companies. There's the NASDAQ, which covers the 100 tech companies in the US. And then you also have the Dow Jones Industrial Average, as well as the Russell 2000. And really, those are just baskets of stocks. I would just do a quick ChatGPT search if you want to learn more about the basics of the different types of indices and stocks and funds that are out there. Another cool thing, just another layer deeper than that, is looking at sector ETFs. So ETF is just an exchange traded fund, and it's just tracking a certain strategy or a sector. And you can see here that each one of these is labeled a different industry. So you have financials, energy, healthcare, industrials, etc. And you can actually look at how a specific industry is performing. So it's not only just picking one stock out. And if we look, say you wanted to look at the financial sector, you can see here that it's been up and to the right. So financials have been performing well with the rest of the market. And then if you went to, say, JP Morgan, you can see that it's also up and to the right. Same thing with Bank of America. And then you can even look at financial related like fintech companies like SoFi, which has been moving to the upside, or PayPal, which has been trading at a really low discount for a period of time and has been rallying along with the rest of the financials. So try to understand that your stock is also going to move with the overall sector, and there's different rotations that happen between these sectors. So that's something that you'll probably realize as you start your investment journey. Next, I want to cover just some basic level technical analysis. We can do this on SPY, which is the ETF for the S&P 500. So this is just the overall broader US market. And you can see here that price reacts in certain ways, right? So we had like the COVID crash, it topped out and it dumped, and there was a big crash. And then since then we broke to the upside. But you can see here that a price likes to react at certain levels. And so you can draw on these charts. I like TradingView. It's just really easy and simple. And you can see here that price rejected from this level. And so that would be considered resistance. At that level, price rejected, and we had a stronger move to the downside. And you can see here we bounced around this level. We bounced back up, and then we rejected here, and then we went back down to the same relative zone. It doesn't have to be an exact level, but it could be like a support zone. And then it bounced to the upside and eventually got all the way back up to the same resistance level from December 21st. And then it broke out. So when you break through a resistance, it's a breakout, and we have a continuation of price to the upside. If this were to break down, it would have been a continuation to the downside. Another thing is obviously the trend, right? So you have a trend either going up or you're going down. And that's just marked by higher highs or lower lows. And you can see here on a line chart, it's a little bit easier rather than looking at the candlesticks, which are like the highs and lows on those days or whatever time period that you're looking at. Because obviously you could look at an hour chart, a day chart, a week chart, etc. And you can see here that throughout 2022, we were in a downtrend. We constantly kept making lower lows and lower highs. And then we had a push to the downside. So understanding the trends of where price is headed is a good way to determine whether or not you want to be long or short stocks in the market. So that's like a quick and easy way of just understanding price levels and supply. Supply is a resistance level and support is a demand level, which is where buyers want to step in, and where resistance levels where sellers step in. So the market is, and everything in the market is always trying to determine what the fair value is. You have buyers and sellers in the market, and they're trying to determine where the fair value is of a company. Another interesting point is it's not just about price, but it's also about volume, right? So if there's a lot of buyers in at a support level, like you see here in the COVID crash, there a lot of buyers stepped in. There's a ton of volume, and eventually sellers got exhausted from selling, and buyers stepped in and price moved higher to the upside. So volume is also a key indicator, not just price. If there's a lot of volume at higher prices, then maybe the fair value is there, right? People are willing to do business at a higher price as opposed to a lower price. And then obviously at different support zones, there's going to be more buyers there. And at this level, there might be more sellers. An interesting thing though, and this is probably one of the most effective trading strategies that I use, is looking at something called volume profile. So at the bottom, you have volume, which is by time. So on that day, this was how much volume, how many shares were traded. Whereas volume profile is what's the total volume at that price. And you can see here, this is called the point of control, this white line, and that's where the majority of people have done business. Then you have this value area low and a value area high. So the majority of the business on the S&P 500 was done between $300, $475, and then the point of control is right around $411. So that's like the fair value just from a volume profile perspective. And you can see here, since we have been breaking to the upside, there's less volume here because there was no volume in the past at those prices. And for volume profile to be healthy, we would need to see more volume build in here and kind of create like a staircase to the upside, right? So you want to see more volume showing up here for us to actually keep those prices. Otherwise, we might come back down to where the actual greatest amount of people are doing business. So that's kind of like a quick and simple way of how I just look at stocks. For instance, maybe looking at a different stock, you can kind of see like this one's been in the downtrend. This is called Enphase Energy. They do solar panels. And you can see here that at times I actually entered into this stock at this support level because it bounced from this level all the way back in 2020. And it acted as support here as well. And it was a nice scalp to the upside to go back and fill this gap. So there's a lot of things that I'll cover here in this channel. I want to talk about like gaps and all these other things, but I'm just trying to keep this as simple as possible to give you the most value in the shortest amount of time. But maybe we can have some live sessions I'll be hosting on this YouTube channel and then go into more detail. A few other things. So that's like most of the technical stuff. What is the fair value? And really you're just trying to get an idea of where people are doing business. You got your resistance and support zones. There's other indicators like relative strength index or RSI, which really just shows like momentum in stocks. So that's something I would just check out as well. If you're interested to get an idea of like a stock is oversold, you can use moving averages like Bollinger Bands. If a stock's trading out of certain deviations of price, then it might be overextended or to the upside or the downside, or maybe it's trading right in the middle and then it will make a move to the either upside or downside. So there's a lot of different strategies that people use to try to get an edge. I will go into more detail about what I actually look for in the upcoming videos, and I'll A lot of these topics that I'm covering are a lot more complicated. I'm just trying to give it to you in such a simplified way. Next, I think we would cover a little bit more into fundamentals, right? So obviously a stock, it really is a company. So let's just look at AMD, for instance. And with TradingView or any other platform, you can see here there's a bunch of data points. See if I can make this larger somehow for you guys. So there's a bunch of data points. You got the price, next earnings reports in 67 days. You got volume, market cap, which is the value of the business relative to the number of shares outstanding times the price. So that's what it's worth. You got earnings, then you got financials. So whenever I'm looking at a stock and I want to decide whether, maybe I want to do a trade or start a position, start scaling into a position, I always go to its financials. Let's see if I can make this bigger. And just a quick way of looking at a stock, you always want to see growth in revenue. If a company's bringing in more revenue, that's a positive sign. They continue to grow their business, and assuming that they can actually draw a profit out of that, right? So you want to see growth on a quarterly basis in revenue. That's a positive sign. On an annual basis or trailing 12 months, this was 2023. They haven't reported yet. That's not for another 63 days. So you can look at just all of the financials here, and top line is important. Net profit is important. Their net profit margin, which is a percentage of their total revenue. And you can just assume how profit that type of business is. And then I think here as well, you can see cash flow, and free cash flow is important. That's what's left over after capital expenditures. And if this is growing, that's also a positive sign. So you want revenue, you want net income or their profit margins to be increasing, as well as their free cash flow. So if the company's selling more, doing more business, more customers, it's growing, that's all positive signs that the stock will continue to move to the upside. There's a bunch of fundamental metrics that you can look at, like price to earnings, price to sales. You could look at price to earnings growth ratio. So there's like a bunch of different metrics that you can look at. I would just recommend looking at ChatGPT, doing a bit more research into that, but it's pretty straightforward. The market's kind of crazy, and there's actually a lot of times where you might think that a company's way overvalued, but it'll be trading at a premium for a really long period of time. So you shouldn't be shorting it or looking for it to drop. It could continue to go to the upside. We've seen the case with a lot of different companies like Tesla, for instance, just because there's a premium assigned, assuming that they can innovate and bring all these other products to market. So they're sometimes, relative to a company's financials, it could be trading at an insane multiple on price to earnings or price to sales. But that also could be a sign that it's overvalued and that it's going to crash at some point to the downside. Beyond fundamentals, these are probably things that I look at the most, is kind of like market sentiment or a competitive advantage. You could look at brands like Coca-Cola or Disney, and people are just in love with those brands. So they have an advantage, right? Like most people are not going to go and buy something different other than Coca-Cola because they're addicted to it, and it's just something that they see in the market. They know right away what that brand is, and they like the product. Other competitive advantages could be like Meta, or formerly Facebook, network effects. So they have like a platform like Instagram with all the users on it. And it's really hard for competition to enter that market because all the other market or the platform, all the users are already using Meta. So it'd be hard to start another social network just because these large players have all the benefits of those network effects because all your friends or family are on there already. Another thing could be like economies of scale. So for instance, like Walmart or Amazon, like Amazon has that distribution side of their business. They're able to undercut competition and deliver products within a few hours and the next day. Walmart was, able to enter certain markets, cut out the family businesses because they can sell products for so much cheaper because of their distribution, their supply chain. So those are some examples of a competitive advantage, or what is called a moat, like having a moat around a castle. So it's really important to protect your business, to protect your profits. And that's obviously going to lead to your bottom line or your profit margin as well as your revenue, because you'll be able to grow your revenue, get more profit, and have more cash and reinvest into the business. So those are all positive things. Things that I think that have really changed the market, and this is how I like to do a lot of trading, is like social media, which is extremely important. You saw this with Tesla, was like kind of the first one to do it. Just this high conviction stock where people were just getting behind it and talking about it all the time. And then of course, like it's evident with GameStop, AMC, Bed Bath & Beyond, all those meme stocks where they were trading at crazy multiples above their actual intrinsic value. And then obviously crypto, there's a lot of controversy around it, but a lot of it is just like attention and adoption, right? Like price is really the only thing with crypto. So people are always constantly buying crypto, like Dogecoin, for instance. But is Dogecoin ever going to really have any value, or are people just going to invest in it because they think that they can make money buying it? So social media is extremely important now. Everyone's on Twitter, or now X. So that's like something I would definitely look out for, is like how often are people talking about a specific stock that you're invested in, or even the sector, the industry, whether that was like AI with NVIDIA and AMD, or you had like EVs a few years ago, and then those stocks have since come down because they were overvalued and overhyped. And that might be the same thing here now with AMD and NVIDIA and these other AI stocks. And then just recently, you've had more talks about like nuclear reactors, nuclear energy. So there's been stocks that have been rallying on that news because there's interest in that again. There's talks of flying cars. So there's all kinds of these things. And there's not even really a product that's actually invented yet. It's just a business, a shell with assets and money that is looking to accomplish one of these things. And people are driving the price to the upside. And another example would be like even during COVID, you could look at like Zoom or telehealth, which was TDoc. So these are all tickers that I'm entering here. And then Piton. So like people were staying at home, and all these stay-at-home stocks were rallying to the upside, but then obviously over time they all crashed to the downside. So you don't want to ride these waves too long usually, because people's attention goes somewhere else, and so does their money. So you want to be ahead of these trends before they actually happen and get out before they end. And then obviously like the management team is also important. That's something I usually dig into a bit later. So usually I start with technicals, looking at the chart. Does it make sense from like a technical perspective? Is this a stock that I want to buy and I can make a profit quickly on? And then if I'm in the stock, I want to determine if I actually want to keep holding it. And that's when I do more research. So I kind of scale in and then do more research. But I have a clear mindset of, is this actually a good company or not? Usually just because I'm more experienced and been looking at these stocks over a period of time, I kind of know all the different stocks that I'm looking at and which industries or sectors are getting more love than others. So all of this you'll develop over time. But yeah, I think like you just kind of dip your toes in a little bit, start with paper trading, maybe start with a small amount of money, just start looking at charts. Don't go too crazy into all the indicators and get distracted from what really matters. And I think you'll do great in the long run. So hope you enjoyed this video. Hope you had a great Thanksgiving, and I'll see you in the next one. Peace.